All right, good morning, everyone. Hey, Claudia. Hey, Briggs. Hey, Peter. Hey, Zeus. All right, guys. So futures are bouncing a wee bit. Let's see. We got the RUT up 0.5%. We have the NQ up a third, and the S&P futures up a third. So we'll see what the bulls can do today. So here on the daily charts, I have the Keltner channel set to measure 3 average true range moves above and below that 21 EMA. So that's the Keltner channels with a factor of 3. And plus or minus 3 ATR. It's definitely an extreme. So if you look at the QQQ here, not too often does price come down to test that minus 3. Never mind trade below that minus 3. So heading into today, you've got the QQQ at minus 3. We have the S&Ps trading below minus 3. Got the small caps trading at minus 3, and the RSP trading below RSP. So things are really oversold. A couple of the big dogs, Amazon, who's gotten clobbered here, that trades at minus 3 ATR. Oh, Microsoft took a good thumping. That's also down there at minus 3 ATR. So it's one of those things where all of the pretty colors, all of the signals, say we want to short the market. Momentum-wise, as far as structure goes, as far as the stacked EMAs, everything from a daily chart down to a 5-minute. In the S&Ps, the Qs, your tech stocks, your semiconductors, everything's poised for a move lower. It's no different than when we're back up here. And the S&Ps, the Qs, everything has buy signals in every time frame. Structure is bullish, momentum is bullish. From a swing trade perspective, doesn't mean it's a great entry. So keep in mind, in a perfect world, if you're shorting the market, you're trying to put your shorts on somewhere closer to that 21 EMA. And then by the time we're down here at minus 3, you want to ring that register and cash out. Now, I think we're headed down towards 4,200. We've got a big whopping target down there at that 200 SMA. But I don't think we're going to go there in a straight shot. We could, of course, but I think a little bit more likely we get some sort of bounce. And that could be back towards 4,300. A big key level we closed below yesterday. It could be a push back towards 4,400. I'm trying to short anything back towards pretty much the daily 50. So all the signals point towards we want to get short. As far as account management, as far as risk versus reward, try to short these bad boys on the rallies if we get one. And then the dollar here, this is kind of the opposite of the S&Ps. S&Ps, QQQ, the small caps, they're all hanging out down here at minus 3. The dollar, on the other hand, is up here at plus 3. So as far as trying to get a little bit of lift in the market, if you could get, look at all the buy signals. They don't call it the greenback for nothing. But yeah, if the dollar could just, kind of ease on back down towards that 21 EMA, that's probably where you're going to get that bounce in the market. Or at least it'd be really helpful. Where the dollar might be a bit tricky here is the fact that it's coming off that weekly squeeze. A good weekly squeeze can give you a little bit of that. Now, I don't think the dollar is setting up for a move that big. But point being, once a weekly squeeze fires to the upside, that product could have 5, 6, 8 weeks of momentum. So in that regard, it's a little bit fresh here. Could be a lot more room. But yeah, guys, the game plan for now is wait for a rally. Unless all the signals change, that rally will allow for bigger swing trades. going 3-4 weeks till expiration, buying some at the money puts. The closer we get to the 21, the bigger we can put on the size. So then in the meantime, this trade's like we opened up a condor in the mastery in the gold room yesterday. For the SPX here, we've got the short calls at 4,400. We've got the short puts at 4,200. So there's no daily squeeze. We don't have a great entry near the 21. It's not the moment in time where I'm going to put 10, 15% of my account into some puts. Like really going for that aggressive trade. I'm going to throw on a condor maybe. And if the S&Ps can finish Friday somewhere between those two levels, closes somewhere above the 200 SMA and then somewhere below the daily 21, that trade's good for 1% and change of my account. If I can rattle off a few trades like that per week while we wait for a bigger setup, it's a nice match. But yeah, folks, that's the gist of it. Not too much has changed here. If anything, we're just getting closer and closer to the point where if you continue to get aggressively short down here, there's a growing probability you're going to wake up to a painful morning. But if y'all got any charts you want to look at, any names you want to go through, feel free to throw them on over. And we'll see what today brings. Not too much context between the charts. Tesla looks a little bit better than its peers, but not great. He had NVIDIA. NVIDIA held up a little bit better yesterday. I still think NVIDIA sets up as a short. Oh, yeah, one more thing I did want to cover. So, and I think as we head into the end of the year, these are really important to pay attention to. We've got a lot of names that are printing 3-day and 2-day squeezes. Chances are, as we roll into October, come December, January, they've probably fired. The swing trader in me prays that come December, January, they fired. Because I'm not looking for a 3-month chop fest. So couple 2-day and 3-day squeezes for you. All right, couple for the road. None bigger than the S&P futures and the QQQ. Let me put the Keltner channels back to a reasonable level. None of that +3, -3 nonsense. All right, lower band. All right, so S&P futures. We've got the double squeeze, the 3-day time frame and the 2-day time frame. Come on now. All right, so what we know for now is we have compression. And that pretty much is just the beauty of the squeeze. Price action, volume, volatility, everything's coiled up. That's our heads up that sometime soon, we're probably going to get a bigger than expected move. In the meantime, it's our job to try to call for timing and direction. When should the squeeze fire? More importantly, what direction should the squeeze fire? Now, with those of y'all with the big 3 indicator, that's usually pretty easy. If the squeeze has a buy signal, it should fire long. If it prints a sell signal, it should fire short. At the moment, the 3-day and the 2-day, they're neutral. We can look and see which way do things lean. All right, it might not be all that bullish, might not be all that bearish. Things might not be to the point where we're actually printing that signal. Which way do we lean? Scoreboard says we lean bearish. Bulls have 1 point, the Bears have 3. Momentum says better chance we fire short. Histogram below the 0 line. Could change. At the moment, though, the stage is set where there's a better chance the 3-day squeeze tries to break short. All right, we go down to the 2-day. And same thing, no buy signal, no sell signal. Which way do things lean? On the scoreboard, the Bulls have 0 points. They don't have any structure to work with. They don't have any momentum to work with. Better chance that 2-day squeeze fires short. Now, until that changes, for the sake of discussion, if a 2-day squeeze and a 3-day squeeze fires short in the S&P futures, pretty much everything goes lower. Down goes Mamacita, down goes the whole crew. So S&P futures, and then the QQQ. That's right, folks. The Q-tips. All right, 3-day squeeze. Which way do we lean? And the seesaw would lean to the downside. Bulls have 1 point. Bears have 3. Momentum under the 0 line says better chance of squeeze fire short. If I drill down to my 2-day time frame, as of yesterday, a 2-day squeeze just fired short. That's going to have a big influence on the 3-day squeeze to eventually go ahead and do the same thing. Bulls have 0 points, Bears have 2. Momentum below the 0 line, under the 21 and under the 50. We're pretty much the only ones that matter. All right, they set the stage for the following 2-day and 3-day squeezes. We've got NVIDIA. And let's see, so the 2-day squeeze just fired short. And right now, the 3-day squeeze also has a better chance of firing short. Momentum below the 0 line. And you're getting 1, 2, 3 closes here under the 21 EMA. If that 2-day squeeze keeps going, pretty good chance the 3-day squeeze also breaks short. Never mind the squeezes here in NVIDIA. There's a better chance NVIDIA goes lower if the S&Ps and the QQQ fire their squeezes short. So there's your timing. If the S&Ps have a 2-day squeeze, if the QQQ has a 2-day squeeze, and NVIDIA has a 2-day and a 3-day squeeze, the ideal time to try to short NVIDIA is when the 2-day squeezes in the S&Ps and the Qs fire. When to hit you back? Amazon. A weekly, a 3-day, and a little do-si-do. So let's see. Weekly squeeze, we're at a standstill. All right, old Western standoff here. Bulls got 2 points, Bears got 2 points. So now what can I do here? All right, no real edge for a short, no real edge for a long. Drill down to a lower time frame. Action on the lower time frames is going to influence that weekly squeeze. So over on the 3-day, we've got a squeeze. Momentum just broke short. Price is under the 21. Better chance of fire short. Down on the 2-day squeeze, Bulls got 0 points, Bears got 3. Better chance of fire short. And this is pretty much the theme. It's the same thing here for Meta. If anything, Meta's maybe a little bit better. But generally, that is the theme for now, my friends. So keep an eye on those in the background. Most importantly, S&P futures and the QQQ. So little context for you. If we get a decent rally here, the rally's kind of your chance to build up your short inside of those bigger time frame squeezes. Alrighty. Andrew, I'd like 50, 60, 70%. If we're at 50 and things are getting a little frisky out there, I'll take the 50. If we're just more so kind of dead in the water, chopping around 4,300, probably take 60, 70. So Brad, that's part of the brand new Big Three Squeeze bundle that we launched. What month is it? September? That we launched last month. So you can find that on the website. Hey, what's up, RK? Short points of the ES and the NQ. So the easy answer is I'm kind of game to short this. Really all the way back up towards the daily 50. Especially if momentum's below the zero line and we're cranking out that daily sell signal. So usually the sweet spot and the real target to get short, it's going to be that 21 EMA around 44.35. But from an aggressiveness standpoint, I'm going to approach the whole short the rally thing with the thinking that I'd be willing to short it all the way back up to the daily 50. Meaning I'm probably not going to put my full position size on down here. So the daily 50, the daily 21. And then I think you can look for lower time frame spots along the way. Hourly 21 EMAs. The way I try to look at it as, what do the Bulls have to do here to kind of cancel out the odds of the market going lower? I think if they get it back through the daily 50 above 4,500, all right, at that point, the Bulls are kind of taking the wheel back. But really anything under that, given the structure, given momentum, given the signals, given the 2-day squeeze, the 3-day squeeze, would be willing to short it, kind of all the way up. Evelyn, where do I see the SPY or SPX going up? I think for now we want to mark up some kind of key psychological levels and then just kind of take it from there. On the path towards 4,200, I think 4,300 is kind of a big over-under. Meaning if we keep hanging out under 4,300, the bears are probably just going to get the job done and go down and test that 200 SMA. If the bulls want to try to somewhat avoid that process, if they can prop it back above 4,300, then we might get a bit more of a rally. And then I still think we roll over and down we go. So as far as a bounce here, the first target would be 4,300. If you want to get a bit more granular, so to say, 43.25 kind of puts it back above this base. So little spots like that. Peter, if the credit is still somewhat the same at the open, you can definitely take the same trade. We're going to gap up a little bit here, but nothing that says, here comes 4,400. And Claudia, C. All right, guys, let me keep going through the questions here. William, so that's the momentum histogram for the Big Three squeeze, which is based on MACD. RK, am I expecting another walk down day for ES and NQ? Really, really good question. So what RK means by walk down day is basically yesterday. Here's a 15-minute chart. We gap down. So basically the bulls wake up with their head underwater and they can never get their head back above water. It's not, total panic. We're not going limit down. It's just this endless, relentless, just walk down, grind down kind of day. So RK, good question. Is today going to be another day like that? I think to try to answer that question here early this morning, we'd want to look for things that point towards a walk down day. One of those things being, I think a great gauge is your lower time frame big three signals. Now, keep in mind how oversold the market is. When we get this oversold, we're at -3 ATR on a daily chart. In the short term, the bulls have got a lot of juice to work with. All right, everyone's getting short. Everyone and their mama is buying those puts. Just a little bit of effort from the bulls, you can get a decent little short squeeze going. So even with that oversold potential, all day yesterday, they couldn't even get a 5-minute buy signal. Now, on a regular day, if the S&Ps are kind of hanging out near the daily 21, that's not as big of a deal. When we're that far below the daily 21, and the bulls can't even show up with a 5-minute buy signal, might not say, hey, here's a walk down day, but it tells me we're probably not going to see a big bounce. So you could look at it through the lens of, is there any evidence here the bulls have anything to work with? If they don't get a 5-minute buy signal, probably not. If we go down to the 2-minute, we had 2-minute buy signals for a grand total of maybe 20 minutes all combined. So if the bulls can't get anything going on a lower time frame, as far as a buy signal, tells you they're not working with too much. Then I think you watch your internals. You'll notice on a day like yesterday, if you watch the ticks, it's a general statement that ticks don't even really get a chance to breathe above zero. Never mind hanging out above zero. A day like yesterday, you're kind of hanging out all day near -500, -600. And then all throughout the afternoon, you get this -1,000 flush, -1,000 flush, -1,000 flush. So more action like that today is kind of what it would look like for a similar kind of situation. Bulls can't get anything going as far as a buy signal, and the ticks are just pretty relentless down here at these extremes. Now, being that we're so oversold, if the ticks can even hang out above zero, like just chill out today, stabilize, behave, and the SPX gets something like a 5-minute buy signal, being that we're that oversold, that might be enough to trigger a decent little bounce. So a few things to watch, RK. Good question. Freddie, TQQ and SQQ. These are ultra short, right? I believe. It'd be no different than if I'm trading the QQQ. Once we're this far from that 21 EMA, if I want to get long, got to buy it on the pullback. If I want to get short, got to try to short it on the rally. So I look for the same trade there on the TQQ. All right, let me jump over to the YouTubes here. Good morning. What's up, Kevin? Kevin wants to look at TGT for a short. Kevin O'Toole. That's a hell of a name, man. And I am saying that as a compliment. Kevin O. Target for a short? Yeah, if you can get it a little closer to 120-ish. Because here's what can happen. You buy puts on target, for example, down here. 3, 4, 5 days. Just rallies against you back to that 21 EMA. you're taking it on the chin. Potentially your trade's hitting max loss, or you're getting stopped out. When in reality, nothing changed about the setup. Structure didn't change, momentum didn't change. So whether it be Target or whether it be Amazon, and there's going to be times, guys, where these kinds of trades can work. You can short Amazon and buy puts at these extremes, and you might wake up to a huge gap down. In my experience, that's building a trading game plan around something that works maybe 20% of the time. So what can happen is we're getting short Amazon here, and then we're getting stopped out on the very rally we would love to short into. So you'll notice most things right now are just a reflection of the S&Ps. Whether it be Target, whether it be Microsoft, whether it be NVIDIA, AMD, the small caps, the Dow, everything took a good beating. And now we're kind of at the point here where the easy short, for now, is probably done and over with. The easier short for the next trade would be on that bounce. All right, my man Godswill, what's up, brother? Always good to see you in here. TAL. Ooh, yeah, it's beautiful. I have to like it. I've got no choice but to like it. Weekly squeeze of the buy signal, a 3-day squeeze of the buy signal, a 2-day squeeze of the buy signal, and a daily. So we call that the big quadruple, the big 4-piece. It's a beautiful setup. I would just trade it accordingly, meaning this has everything you would want for a long. The market itself, I think we always want to put first and foremost, is pretty much the complete opposite. So that just means, as a general statement, in this kind of environment, if you get long TAL, you're kind of on your own. No wind at your back from the overall market. Very likely no wind at your back from the sector it belongs to. Now, that doesn't mean we can't trade this. But if the market looked like TAL, everything just lines up. And if the sector this belongs to looked just as good, I'm going to trade that with the bigger position size. In the current market where most things look awful, if I want to trade this, I'm just going to scale down my position size. That way, if I buy calls today, and then tomorrow morning the S&Ps are gapping down to 4,200, taking everything with it, I'm not going to lose my shirt on TAL. Beautiful setup, man. Beautiful setup. How's Boston? Boston's starting to get chilly. Yeah, for us here in Massachusetts, it's starting to happen. The mornings are cold. The sun's going down early. Before I know it, I'll get done trading. The market will close, and it'll pretty much be dark out. But this just so happens to be my favorite time of year. I'm an October baby, and fall, like late September, October out in Massachusetts, I think the most beautiful time of the year. Get the leaves changing color, all the foliage. And then we get December, January, and it's pretty miserable. So TD, my goal with any squeeze is I want to have built my position before the squeeze fires. I'm not a fan of, and not from anybody in Simpler, but just like, other folks out there, they teach the methodology where the squeeze fires and then you buy your calls. You'll notice, guys, if you're looking for a push towards 2 to 2.5 ATR, Sometimes you're there before the squeeze fires. Or sometimes the squeeze is fired for one day and now you're already at the target. So my goal is, we're finding it somewhere near that 21 EMA. We have the signals that give us edge to call for a push higher. Then we try to buy those calls, do our debit spreads, sell our puts before that big push. And the real beauty there, guys, is the options pricing. As TAL is just kind of chopping back and forth here in that daily squeeze, premiums are coming down, right? Everything's contracting. Volatility, implied volatility, price action, volume, the premiums. Inside that chop fest, these calls, these puts, they're not a hot commodity. More importantly, though, inside the squeeze, the market makers are pricing those calls based on the expected move. What does expected move action look like? It looks like a daily squeeze before it fires. We're going up a little bit, we're going down a little bit, but for the sake of the market makers, we're staying within that expected move. What they're not taking into consideration, and this is our edge, is the squeeze. What the squeeze says is, hey, y'all, I'm gearing up for a bigger than expected move. Meaning, whatever those market makers are pricing these options based on right now, I'm about to blow that expectation out of the water. So that's the beauty of it. You're buying those calls when they're priced on when they're priced based on the expected move. Market maker might think this thing goes another 50 cents. So if you can buy them in the squeeze, from that point of view, you're buying them at a huge discount. When the squeeze fires, when it blows that expected move out of the water, you're kind of benefiting from this double whammy. My options are gaining value not just because of the directional move, but now I'm catching that big pump in premium, catching that big pump in implied volatility. So the magic of that, so to say, kind of begins to fade when you're already up here. A lot of times you get there before the squeeze officially fires or just as it officially fires. So the last short that we took was AMD. Shorted it here, then the squeeze broke short. If we waited until the day the squeeze officially fired, we would have gotten short that day right there. The move is over. If I bought the puts on that day, I've missed out on the magic. If I can buy them back here, even better back there. Then if the squeeze breaks, I'm going to catch that double whammy effect. Yeah, Claudia, I don't get up to Boston too much, but it is a nice city. I got married in Boston, so got a little sweet spot for it now. I live a little bit less than an hour away. So close enough, but not too close. Yeah, all right, I tell you what, just reach out to customer service. When I hop off the mic with you guys and gals, I'll just shoot them a fresh link. And hopefully that'll work out any bugs. Oh, Bentley, okay. Yeah, really good school. Really good school. Rock used to live in Weymouth. That's funny. JC used to live in where did he live? He used to live somewhere out here. Don't quote me on this, but I think this is when he started Simpler Trading. Or back then it was called Trade the Markets. TTM for the TTM squeeze. I want to say it was Auburn. Andover, that's what it was, Andover. Yeah, Andrew, I hate to say we're responsible for his massive success, but I'd like to think building the foundation in New England might have helped. Yeah. But all right, guys, any other questions? Anything else you want to take a look at? We've got the cash bell ringing in 9 minutes. For those of you in the options room in the mastery, any little bit of upside, any little bit of sideways chop, ideal for the condor. I mean, anything above 4,200 is good for the condor, but as far as peace of mind's sake, all right, ASML and some Google. Like most things in the market, it'd be a short on the bounce. Now, what I like about the short on the bounce even better, it's kind of lost its entire backbone. This stock is now truly at a point where, at least from a daily charts perspective, it has nothing. No momentum, no structure. More importantly, you're under the big three moving averages. 21 EMA, 50 SMA, and the 200 SMA. As far as bigger picture trend, never a good thing for the bulls for the 50 to break under the 200. That points towards you're probably going to spend most of your time either chopping or trending below that 200 SMA, which, yeah, makes it a nice short. And then Google. If we were in a better market, I'm probably buying a lot of calls here. Brand new weekly squeeze. It's an A+ setup, and I've got it right above the buy zone. The two problems are, one, the market looks awful, and then two, everything inside of this weekly squeeze doesn't currently support the idea of it firing to the upside. I don't have a bullish daily. If anything, I've got a really, really suspect daily. I've got a 4-hour sell signal, a 2-hour, a 1-hour. By default, the shape that the S&Ps and the QQQ are in would tend to make a tech name, or really any name, an easier short. Now, if anything, maybe Google holds up better than the rest. Maybe the market cleans things up in a few weeks, and then potentially we revisit the idea of this weekly squeeze. So it's like, on the surface, this looks very bullish, very healthy, very strong. If we give it an X-ray, got some issues happening here on the inside. So it's 6'10" and jacked, but its lungs are shot. It's got kidney problems. That's how I would describe Google. But all right, my friends, thank you for your time this morning. I will let y'all go here with 5 minutes before the opening bell. And yeah, we'll manage the condors. And then I think the first spot you're looking for here is 4,300. 4,300 SPX. If you get towards that level and things kind of peter out and roll over, that might be all she wrote as far as a bounce. And then the bears might get the job done and go down towards that 200 SMA. My preference would actually be we get through 4,300, we get a bigger bounce, and then we're shorting somewhere up yonder. But all right, folks, have a good day, and I'll talk to y'all soon. Adios.